Whether its bid to earn 1% of GM will be cleared by the Chinese government. SAIC already in a joint venture with GM. With his take on the deal is Bill Russo, president of Synergistics, who joins us now from Beijing. I'm sure that these Chinese authorities will definitely give this 1% stake the go-ahead here. It's a no-brainer, really. So the thing is, it just indicates the deepening of the relationship between the two.
Yeah, absolutely. This is a successful partnership. It's one that maybe wasn't the first in China, but certainly one of the most successful, and it's with a partner in China that has been very commercially oriented. So I think GM is very fortunate to be in the market with this company.
I'm going to talk more about this partnership in a second, but I want to get your thoughts on the IPO itself. $33 a piece, people suggesting the price could go up to $36 on the first day of trading. Your thoughts?
I'm very optimistic about GM's prospects. What we're witnessing is a company that's restructured its North American center to be profitable at a much lower break-even volume. But I think the more important message is that long-term, they have a new Asian-centric growth strategy that very much relies on building on its successful platform in China, and expanding that reach beyond the borders of China. So I'm very optimistic that their growth prospects, as they become reborn as this Asian-centric growth company, are very, very positive.
Right, there is a lacuna, a bit of a hole in their market in the sense that they have lagged in India. Do they follow the same template that they have with SAIC with an Indian car manufacturer, or are they able to leverage what they have in China and transpose it onto the subcontinent?
Well, what they're going to try to do is they're going to try to take the capabilities from their Asian partners, both Daewoo and SAIC, to expand beyond the borders of just China. By leveraging the capabilities of these Asian affiliates, they're hoping to build on the scale of China to reach out to markets like India first and Southeast Asia. I think the thing you have to recognize is the market composition, the mix, is quite different in these markets. China, they were able to enter at the midpoint and introduce Buick-branded mid-size and full-size cars. They're now yet leveraging the lower cost structure of SAIC to go down into more entry-level price segments, and that's where they hope to then take that model to India.
Right, so this is really what it is, and you think that the product mix is correct at the moment with regard to that? And what about the product mix in the States as well? How's that for you?
I think, again, with the challenge in the States is quite different. They're already a full-range manufacturer. They, unfortunately, were burdened with a cost structure that caused them to be unprofitable in many of those segments. By lowering their cost structure, they're able to compete more effectively in the heart of the market. It used to be American car companies were limited to profitability only in SUVs and trucks, which is why they had a high concentration there. Again, cost structure improvements allow you to go after more of the mid-range passenger car market, which I think is good news for GM.
Bill, very quickly, Ford didn't go into bankruptcy, 90% up over the course of the last 12 months in terms of its share price. What would you rather be tomorrow, a GM shareholder or indeed a Ford one?
Well, I think in Ford's case, they definitely benefited from the image of not having gone through that process. But in the long run, I think having gone through that process positions GM to be very successful, not just back in its core market of North America, but in these new emerging growth markets, which is where GM has the advantage. So long-term global operations and growth prospects, I like GM.
Bill, thank you so much for joining us. Bill Russo there, joining us from Beijing. He's at Synergistics, from Synergistics.